So the market rallied pretty nicely today, about 7.5%, off of the beginning of what might be the flattening of the new case curve. Yesterday, we had a pretty solid decrease in the US. If you look at the national total, we were picking up every day for a couple days consecutively, more than a couple days. And then we saw a pretty steep drop from that. And the market reacted very positively, as they should. As I've kind of predicted, as soon as the curve is going to start to flatten, that's the next incoming catalyst for a market rally. Now, the rally today was pretty aggressive. We're probably not going to see another day this aggressive unless we have to shoot down more. And I don't think we're going to shoot down more. I think, we might kind of be on a little bit more of an upward trend. And, we're kind of past the bottom. We've bottomed. But I don't think we're going to top so quickly. We're not going to go up as quickly as we went down, despite what today is going to tell you. Today we're up 7%, but we had a lot of down 7% days on the way down, and we're not going to have a lot of up 7% days. Today was kind of the the rally day. Now it's kind of, all right, so today happened. We know we're going to see the other side of coronavirus. We know that exists. We know the curve is going to flatten. And we know we might end up turning the economy back on April 30th. But now the question becomes, what is the economic damage that has taken place? So I've been hearing a lot about these mortgage problems. That rings a bell. So a lot of people are out of jobs, might be buying, and might have houses. There's a lot of issues, obviously, going on in the economy. That I'm not saying it's going to be some sort of '08 debt crisis, but there's a lot of mortgages that are outstanding that people are going to struggle to pay. And they've got other expenses that they're trying to struggle to pay, and their income isn't the same. Either their investments got crushed, that's obviously the less of the important issues, or they lost a paycheck. And that's a lot of people. We're talking like 700,000 people. It's a lot of people. Okay, it's a lot of people. It's about 1% or so of the working population. But a lot of people are otherwise affected in some way. And it's going to affect who's buying and going out to buy a new car. Obviously, GM being hurt. BMW, not an American company, still traded, being hurt. Ford being hurt. Tesla should probably be hurt. So a lot of these companies are going to be affected by that. And that's going to put a damper on the rally. This isn't going to be as quick as we came down. We're going to come up. It's just not the way it's going to be. There's probably a lot of other economic issues we just don't know. I don't know. We've never dealt with this kind of thing before. So there are economic uncertainties. The virus, while the curve is flattening, is still in the early stages of that flattening. We don't know if the virus is going to go down as quickly as it came up, or if it's going to go up and then somewhat plateau and slowly come down. We just don't know. So it looks like in Italy, it's kind of somewhere in between that. It still went down slower than it went up, but it didn't fully plateau. It started to decrease and continued to be on a downward slope. So hopefully we'll see something like we saw in Italy here, but that's not even the most optimal situation. The end result, though, the most important thing is that we turn the economy on April 30th. That's what's factored into the market. People think April 30th is the deadline. Now, Dallas, Texas, has extended that to May 20th. So that's not good. It's kind of concerning if you're in Dallas. But we don't want the rest of the country to be doing that. We want the rest of the country to stick to the April 30th deadline. And if they don't, that is a catalyst for downturn. Now, I don't think that's going to happen. The press conference was good. The flattening of the curve is good. There's a lot of good that happened today that leads to, validation for a market rally. Not saying the market shouldn't have rallied today. I'm saying the 7.5%, it's a little aggressive. But we'll take it. I'm not going to say the market shouldn't have rallied. Rallied hard. A lot of pent-up demand is certainly in the market. A lot of people have either had cash or have been waiting for an opportunity to buy. Or, there's a lot of different things going on. But we'll see what happens now. Now it's let's hope the flattening of the curve remains, and this wasn't just a Sunday, less people going to get tested, less people testing kind of thing. Let's hope that stays consistent over the course of the next week. That will be very good. We will continue to rally. If that happens to be the case, we might have a day or two of, not so hot buying, in which we see a 1 or 2% down day. That's just the way it is. It might even be tomorrow after a 7.5% move. So, this week is crucial. Next week is very crucial. And hopefully we'll be turning the economy back on April 30th. So if you haven't been buying, now is the time to start putting that cash to good work. And hopefully we'll end up on the good side. So until tomorrow, peace.